All right, ladies and gentlemen, those were the headlines, but let's now put the spotlight on Jumbotail. Well, that's India's newest unicorn. The Bengaluru-based company essentially is a B2B e-commerce company. It's a retail platform for food and grocery. It has recently raised $120 million in a Series D round. That's a funding round that was led by SC Ventures, which has actually pushed the company's valuation to over $1 billion. Now, SC Ventures is the innovation and investment arm of Standard Chartered PLC, and this funding round saw continued participation from existing investor Artel Asia. That brings the company's funding to $263 million to date. Now, Jumbotail, remember, was founded in 2015. It offers a full-stack suite of services to modernize India's traditional retail ecosystem, and its offerings include a digital marketplace, logistics infrastructure, working capital solutions, amongst other arms. Let's then get on board Ashish Jhina, who's the co-founder and COO of Jumbotail, to talk about the company becoming a unicorn and, of course, about the latest fundraise. Thank you very much, Mr. Jhina, for joining us here on ET Now. I'm going to be talking about how you're looking at deploying that capital, but let's first talk about your company being the latest unicorn. What are the key milestones in terms of GMV, profitability, and market share that you're aiming to hit over the next 12 to 18 months?
Thank you for having me, Sumita. I've always maintained this as far as valuations and talk of valuations is concerned. At this point, I'm not going to talk about valuations. That's been a common practice, and I'd like to keep it that way. Having said that, I think what's very important to us is that having the Solv India team join us as part of this journey after the acquisition that we've just completed. We're very excited to have a strong team joining us. It gives us access to new categories. It gives us increased scale in the grocery part of the business that we have, and obviously brings on board Standard Chartered Ventures as a shareholder. All something that we're very excited about. Approaching the market now with a renewed amount of energy, and we're very confident about what the future holds.
Lots of vigor and energy, with that valuation. You don't want to talk about that, but, that's been the talk of the town, Mr. Jhina. So let's now talk about the capital deployment. You've also raised $120 million. How are you looking at deploying that funding? You just mentioned about scaling up and, of course, venturing into different categories. But are there any other areas that essentially you're looking at building with this recent fundraise?
I think one of the things that we've, this is the 10th year of our existence, Sumita. I think we've really, been very, very proud of the fact that we've operated in a disciplined manner. So this capital doesn't really change that. I think we continue to focus on building a profitable business, getting every city on the grocery business to profitability, even faster. Every single transaction on the grocery part of the business at Jumbotail makes money today, and there is still some fixed cost. We're focusing on covering that fixed cost quickly. On the Solv side of the business, we see a tremendous amount of potential for the grocery part of the Solv business, which operates in many of the same cities. We believe that it allows us to offer even better services and a more compelling suite of services to grocery buyers, grocery retailers in those cities. Very excited about the potential of the soft lines business at Solv, which contains toys, apparel, other categories in the soft lines, hosiery, things like that, which are, in our opinion, categories which will help us serve retailers in tier 3, tier 4 cities. Today, combined across both the Solv and Jumbotail businesses, we serve now 500,000 retailers across the country. The non-grocery business at Solv actually covers 400 plus cities, many tier 3, tier 4 towns. So I think we're excited about the fact that our mission to serve more and more retailers and actually be the gateway to consumption of mass market urban India has only been furthered by this. The additional element, obviously, these are all very, very complicated and long value chains between manufacturers, many of whom are MSMEs. 60 million MSMEs in these categories. We believe this acquisition of Solv and the new capital raised will allow us to actually serve the needs of these sellers and manufacturers much better. And the supply chain finance business that Solv has also built over the period of the last few years allows us now to actually provide not only solutions to increase the demand for these MSMEs and connect them to retailers who serve consumers in urban India, but also to actually help connect them to both suppliers as well as buyers to
Okay.
NBFCs that can provide financing solutions as well.
Okay. Right. So you have elaborate plans for the company. But Mr. Jhina, let me also ask you about some past trends. I mean, past trends in B2B e-commerce, there have been certain pricing pressures and thin margins. So how is Jumbotail balancing growth with disciplined unit economics?
I think the fundamental element of success in this business, at least as far as we are concerned, is having a unique value proposition for your buyers. It cannot only be about pricing. Pricing is an important lever, but it can't be the only lever, and a lot of people have made mistakes in doing that.
Right.
For us, I think what we've identified as sustainable competitive advantages in this space are service levels, reliability, convenience, trust. These are often missing in multi-tiered value chains. Building a solid supply chain, building traceability, building the ability for retailers to access a wide assortment and then be guaranteed that assortment will be available to them in quick time. These are the elements that we believe are the recipe for success in grocery and in other categories as well. These are the elements that we're going to continue to double down, invest in a lot of technology to actually build more capabilities to provide and increase the convenience and reliability of these supply chains, and also for sellers in this marketplace, really helping them access a larger number of retailers more effectively through technology-led go-to-market solutions is where we believe the opportunity lies, and this is something that we'll continue to double down. We've had a lot of success. I think some other people in this space have focused purely on pricing and credit-led growth. In our opinion, those have been recipes for some of the bad results, and we've stayed clear of those and executed this in a disciplined manner. Having more capital doesn't change that, but it only makes us gives us more time to continue to execute in a patient and focused manner, and that's what we're going to continue to do.
Right. Right. So, Mr. Jhina, you are going to differentiate with the way you're approaching your supply chains and, of course, expanding your retail base is essentially what you're suggesting. But let me also ask you, since you mentioned supply chain, are you leaning more towards owning logistics assets, or will you be following the asset-light model with partners, and how does this impact scale and control?
I think what's important in this sector is, irrespective of whether you own the supply chain, operate it yourself, whether you're a fixed cost player or an asset-light player, I think it's important to actually be able to ensure that customers, when they order, know that they have a reliable supply chain that will get them their orders in time and in full and in good quality. That will continue to be the focus. From a category to category perspective, the approach will be different. In grocery, we believe Jumbotail today runs the most efficient logistics and warehousing platform for food and grocery in the country today. We're going to continue to work on, we don't own any of the assets, but we manage and orchestrate the entire operation using our technology and, cutting edge execution. This will be something that we will continue to do on the grocery side. As far as other categories are concerned, we believe the right recipe, especially for intercity logistics, is to leverage the significant 3PL infrastructure that exists across the country. We'll obviously continue to work very closely with some of our partners there. And wherever opportunities present themselves to work with good quality partners, even in other categories, and where they can afford or provide affordable and high quality services, we will obviously be open to exploring those. But I think the fundamental principle with which we approach any of these conversations is: does this provide the customer with the service levels they want? Does it help them actually rotate their working capital faster? Does it give them a higher degree of certainty that they will actually get the products they want? And these are things that are beneficial to retailers. These are things that are beneficial to MSMEs and sellers on the other side, and eventually to the Indian consumer as well.
Absolutely. And, these are very essential metrics that you're looking at, Mr. Jhina. But let me just finally ask you one final question that essentially is about your average order value across key verticals, and what are your near-term and long-term goals? Will you be looking at an IPO perhaps, or, will you be looking at acquiring more partners to venture into newer domain verticals like B2C, for instance?
I think we're very comfortable with our view of how the value chain will operate. We are firm believers in the fact that small retailers all across the country, be them in grocery or in other categories like apparel, electronics, etc., will continue to play an important role in the consumption journey of this country. Our goal is to empower them with technology, with services that allow them to actually serve their customers and their consumers better. The Indian consumer definitely wants more, but the Indian consumer also wants all these things at the right price and at the right ticket size. Our belief is that for the vast majority, 500 million people in urban middle class India, the retailer is going to be the method to actually best serve them. And that's going to continue to remain the focus for us. As far as leaders in this space, we definitely see a lot of consolidation potentially happening. We've been approached by quite a few people. We will continue to look at these on a case-by-case basis. If it makes sense, if it's the right thing for our customers, if it's the right thing for the ecosystem, we will obviously look at it. But at this point, I think we're very focused on ensuring that we build a solid, profitable business. Everything else, it will come from there.
All right, so profitability is going to be a key goal, at least for the next few years. But thank you very much, Mr. Jhina, for sharing your thoughts and goals and objectives about the company. But once again, congratulations on achieving that unicorn status. It does really change a lot in terms of, inspiring the next set of entrepreneurs to really come and venture their own startups. Thank you very much once again for joining us, Mr. Jhina.
Thank you for having me.